Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Saudi Arabia sets up to launch a $10 billion share offering in oil giant Aramco. Interest across the region already exceeds that amount. A top Israeli official thinks the war against Hamas will continue until at least the end of the year, as the U.S. says a fresh hostage ceasefire deal is on the table. And Arab leaders arrive in Beijing for a summit with President Xi Jinping. Trade and Middle East security concerns, the main topics for discussion. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Versace in Dubai. Plenty to get through in this show today. We are going to be talking a lot more about that potential Aramco share listing on Sunday onwards. But for now, let's just take a look at how some of the key markets have fared in the overnight session. We did see a bit of a risk-off turn for Wall Street yesterday, and you can see that that is continuing today. The S&P futures are actually seen about 0.5% lower after week close yesterday. Salesforce, one of the main underperforming stocks in the S&P, down 14%. After issuing a subdued guidance for the rest of the year. Also tracking 10-year yields very closely, sitting at 4.6%, still shy of that 4.7% high that we reached back in April. But notable is that this week we have had several U.S. Treasury auctions that have not been received very well by the market. So the reaction has been yields have been trending higher and higher this week. Yesterday, 6 basis points. The day before, 7 basis points higher. So quite a big move on U.S. Treasuries this week. Brent, again, in focus, can't really get a sustained bid at this point, sitting at around $84. We are down, of course, from the $90 handle that we were at around the beginning of April when those geopolitical concerns started being penciled in. Now we're down about 3.5% on the month. And then dollar-yen, also in focus, getting close to levels where historically the Bank of Japan has intervened. Avro will talk more about that in a moment, but 157.37 is where we are at right now. As for our terminal chart today, I thought it would be good to take a look at Aramco, given that they are expected to come along with this new shares listing on Sunday onwards, according to our sources, and take a look at where the stock is trading right now. 29 riyals. The IPO came to the market in December 2019. The IPO price was 32 riyals. So we have gone a long way since, but ultimately the stock hasn't really traveled that much, and we haven't really managed to see a sustained rally in the stock since that IPO in 2019. But of course, expectations is that another listing will be coming due, and that should be received well by the market from what we're hearing from our sources. We'll talk more about that on the show. All right, let's check in on how markets in Asia are faring as well. Avril is in our Singapore studio standing by. Avril, what are you watching for apart from dollar-yen this morning?
Yeah, we're watching for that selling that's coming across assets in the Asia-Pacific, Jumana. Amid those higher U.S. yields, Asia stocks, bonds, currencies are getting hit. And notably, this is coming through on the Nikkei, that is leading declines in the region amid higher yields in Japan. That is sapping some of the appetite for the growth stocks. Now, despite those higher yields in the country, actually some recovery on the 10-year now, we're actually seeing dollar-yen past that 157 level earlier, and this is way past what was thought to have drawn intervention last. That recovery coming through at the moment. Our colleagues at MLive have pointed out that 160 might be the next level to watch. Now, it's not just the Japanese currency that we're watching, so let's flip the board and take a look at what we're seeing on the onshore rate for the Chinese renminbi. We saw the PBOC coming through with a weak fix for a second session, and this is defying some expectations that we would see a stronger fix because the onshore rate is actually approaching the upper limit of that trading band. So the PBOC essentially here letting the currency weaken, but as we've heard from analysts, it's not like it's letting the currency go. It's more about accounting for greater demand of foreign FX. Jumana.
Yeah, so it's both the renminbi and the yen in focus today. Avril, thank you so much for the overview. Now, our top story, Bloomberg has learned that Saudi Arabia is preparing to formally launch a secondary offering of shares in oil giant Saudi Aramco as soon as Sunday. Sources say the sale could raise over $10 billion. For more, let's bring in senior energy reporter Stephen Satinsky. Stephen, good morning to you. Well, Bloomberg first reported that Aramco were considering another secondary share sale earlier on this year, back in January. And ever since then, we have seen a slight underperformance of the stock. Aramco stock is down about 11% year to date. It seems as though, from the investment standpoint, investors are really making room for this potential share sale. What do we know about the economics and the timing of the deal?
Yeah, I mean, I think the timing, first off, just taking a step back on the timing, like you said, down 11% so far this year as well. I think this last week, the lowest level in about a year. That's putting some idea of where the market's going to be going. Now, it could happen as soon as Sunday. I think the offering, they're going to be trying to gain interest through next Thursday. And they're aiming to raise more than $10 billion. Now, to put that into context, the initial offering a few years back for Aramco was $30 billion. So this is a smaller tranche. So far, interest has been from investors in the Middle East, Europe. Obviously, there will be a lot of interest from those institutional folks in the Middle East. But I do have to clarify that nothing has been decided yet. The exact timing and the size of it is still in flux, but what we're hearing is they're aiming for that 10 billion mark at least.
I thought it was interesting. Back in 2019, we just took a look back at the IPO, the original IPO in December 2019. And if you remember into it, there was lots of talk about the ultimate valuation. Originally, Saudi Arabia were looking for a $2 trillion valuation, but it didn't transpire. But then equally, they ended up selling a much smaller stake of Aramco than they had hoped for, 1.5% back then. Also interesting is they offered many incentives for local buyers. Are we hearing of similar incentives to be offered this time around, or is there a feeling that people know the story well enough now to want to buy into it without those incentives?
I mean, I think, if you look at this, again, taking a step back, you look at Aramco and what they're trying to do. The story of oil demand, while Aramco is a giant company, while they are valued very highly, and while they are one of the biggest, the biggest company on earth, you do have to remember that the future is not as clear. So providing those incentives to shore up that investment is likely something that they're going to be trying again, because, to hold up this valuation, to hold up this interest is remarkably important for Crown Prince MBS. When you also look at what they're trying to accomplish with this, they want to diversify away from oil as well. They're looking at things like AI. They're looking at tourism. There's a number of different areas that Saudi Arabia wants to diversify into away from oil. So making sure that they can get the most out of this and the most interest is clearly a key priority. And that local investment is also key to underpin that. You're not quite seeing the exact same interest and excitement from, for example, the United States or even parts of Europe.
Yeah. Fascinating context there, and obviously, given your main beat is energy, it clearly ties into a lot of what you look at with Aramco being the most valuable company in the world. Senior energy reporter Stephen Sifinski. All right, moving on to some of the political news from the region. A top Israeli official thinks Israel's war against Hamas will continue until at least the end of the year. The comments come as the U.S. says a fresh ceasefire deal has been put on the table. For more, Niamh McBurney, Associate Director at Control Risk, joins us now. Good morning to you, Niamh. Thanks for joining us around the set this morning. So those comments, I thought, from the Israeli National Security Advisor, very interesting yesterday, saying that he expects the war to go on at least until the end of the year, perhaps another 7 months. That doesn't sound to me that there is a willingness or appetite from the Israeli side to actually sit at the table and come to an agreement on a ceasefire.
Well, certainly the way that Benjamin Netanyahu, the Prime Minister of Israel, has laid out what he wants from this conflict, the outcomes that he expects to reinforce the security of the State of Israel, he doesn't see many incentives to continue with the hostage negotiations in the way that they have been. Now, the U.S. has said, as you said in your headlines, that there is a kind of a frame of a new deal on the table, but we've been here before. So I'm I'm skeptical, we're generally skeptical about how much the ceasefire negotiations, the hostage negotiations, as part of that will actually contribute to a material end to the ground operations in Rafah and then the conflict as a whole.
And yet there is a lot of criticism being directed at Israel now. More and more you're hearing of European countries who were up until now quite reticent to say anything on record, now saying there needs to be a ceasefire, the killing needs to stop, the incursion needs to stop. ICJ ruling on Friday at the UN's highest court also warning Israel to not continue with their military incursion, and yet they are continuing. Is it the US really that is the only party that can exercise some power or leverage over Israel at this point?
Fundamentally, it is. And although the recent announcements by Ireland and Norway and Spain to recognise the state of Palestine are meaningful for those states and for the potential state of Palestine in itself for the Palestinian Authority, it is the US here that really holds the cards. We have seen the Biden administration is broadly unwilling to reinforce the red lines that they have said.
We heard that yesterday.
Exactly. Those red lines appear to be soft, either side, and up for interpretation. And really that speaks to the domestic environment in the US, that factoring into Biden's presidential campaign and all the other components that fit into that.
But what about Israeli public opinion? I mean, there are many Israeli families still looking out, waiting to get some sort of update on the hostages and whether there can be some form of a deal agreed to so that the hostages can be released. Is there not pressure building on Netanyahu internally to secure the release of the hostages, even though they've said time and time again that they want to eliminate Hamas? Surely the hostages have to be top of mind for many in the Israeli public as well.
Well, what is fascinating about what's going on in Israel at the moment is there is incredible pressure building on Netanyahu, but it's coming from every single direction. There is a huge constituency of Israelis who are deeply unhappy with how he's fought this conflict, how they still haven't been able to release the hostages. There is also a reasonable constituency backed by the ultra-nationalist and conservative movements in Israeli politics as well, who want to see a different outcome.
Yeah.
So he's really in a position where he can kind of not do what he wants necessarily, but he has a degree of control because there's no single group that is leveraging its pressure on him.
What is Netanyahu's off-ramp? How does he get out of this war?
That is an excellent question. It is an excellent question because ultimately, he's seeking not to end it because in ending it, it will, bring him back to court for the corruption charges that he's been trying to avoid for the last several years. The potential off-ramp, the off-ramp that the Arab world would like to see is very much one that we get on the path towards statehood again. We reinvigorate the path we were on back in the 90s and then by some standards the early 2000s. But that's not the one he needs right now. So conditions within Israel need to change. Maybe the constituency of the government needs to change in order for him to be on side with that.
What about the proposed Saudi-Israel normalization deal? How much would that provide him with an off-ramp to end this war and say, well, look, we finally got the carrot that we've been looking for all of these years, that normalization deal with Saudi Arabia?
Well, one of the things that we have found most interesting is over the last couple of months, the Netanyahu, himself and also his government have not been as supportive of this idea as they were before the conflict began, which speaks to how much the landscape has changed in the region.
Yeah, I also think it speaks to the fact that Saudi Arabia probably don't want to pursue these normalization talks with Israel, while Israel still have boots on the ground in Rafah. So I think it's coming from both sides.
Definitely.
Niamh, thank you so much for joining me today. Fascinating discussion. That was Niamh McBurney, Associate Director at Control Risks. Still to come, traders looking ahead to the OPEC Plus meeting this Sunday, with the group widely expected to extend production cuts. The IEA's former oil division head, Neil Atkinson, shares his outlook later. But first, hear why Banque continues to favor equities over bonds. We talk investment strategy with their CIO, Charles-Henri Monchau. That is next. This is Bloomberg.
They have not been stress tested. Do people really fully understand what I said about interest rates affecting what these things are worth? Do they? And if a little old lady finds out that she can't get her money back, and there may have been disclosure there saying, this money's locked up for 5 years, but you know what? Retail clients had to circle the block and call their senators and congressmen, and they could be held to pay.
Well, JP Morgan CEO Jamie Dimon, not mincing his words there, talking about potential problems in private credit as more retail investors get on board. And Atlanta Fed President Raphael Bostic says he's hopeful that the explosive price pressures that began during the pandemic will normalize over the next year. Bostic says a reduction in inflation would help him gain the confidence needed to cut interest rates in the fourth quarter. Well, there has been a reduction in inflation, but the question is it enough for the Fed to start cutting rates? Let's bring in Charles-Henri Monchau, Banque's CIO. Good to have you with us again. I actually want to start with the price action that we're getting in yields this week. We've had several weakish auctions, 2-year, 5-year, was it 7-year yesterday? No, 10-year. And they weren't very well received by the market. What we have seen is yields have started moving higher again. 10-year sitting at 4.6, still shy of the 4.7 high we got back to in April. But what does this tell you about the U.S.'s ability to place the substantial amount of debt that they're issuing?
Yeah, you're right. Market action yesterday was very interesting. Indeed, we know that there are two issues for U.S. Treasury markets. One is inflation, obviously, with the risk of inflation coming back. And the second one is the fact that the Treasury issuance in 2024 will be twice the amount as last year. So we know that it creates some stress. We also know that the trough of the market last year, the equity market, was when the 10-year hit 5%. Guess what? We are getting close to this. We are close to 4.7%. So you can feel that the closer we get to this threshold, the more nervous the market is. Global market conditions are good for equity markets, but obviously, if we get, let's say, back to this 5%, we need to know from Mrs. Yellen and from the Fed what is going to happen. Last time they came with this stealth yield curve control. What they have in mind this time. And I think this was the stress of the market yesterday.
I think one of the big difference, though, is, and I'm just bringing up on my own terminal a chart of 10-year JGBs. Interesting to see that today, obviously, we are in a different global bond environment. And one of the major differences is that JGBs, 10-year JGBs, keep moving higher. We're sitting at 1.07%. To what extent do you think is that move in Japanese bonds lifting all other yields around the world?
Yeah, it's a very good point because the U.S. Treasury need to find some buyers. So there are less buyers coming from China. We all know this. Probably less buyers coming from the GCC. And then the biggest clients, the biggest buyer of U.S. Treasury is Japan.
Yeah.
And now with the yields moving up, obviously it creates competition. And this is also another stress for the U.S. Treasury market.
Yeah.
You're right.
So at what point do stock markets start reacting to these higher Treasury yields? You said that 5% last year was the abyss of the market. But so far, we've seen good momentum with S&P, NASDAQ. It was only yesterday NASDAQ made another record high.
Yeah, you're right, because corporate profit growth has been quite strong and offsetting, all of the stress of yields coming up and interest rate expectations being cut down. But yes, as you mentioned, 5% is probably a very important threshold. Also, keep in mind that if you look at the market action, everything except NVIDIA, basically, or except the Mac 4, the Mac 5, has been down. NVIDIA has added in 1 week the equivalent of LVMH market cap. So it has been crowding out a lot of market cap. The rest is starting to struggle because of the rise of bond yields.
So we spoke about a month ago, I think, and we were just beginning the earnings season in the U.S. Now we've come to the end of it. What were your main takeaways?
Well, earnings season has been quite strong. We are talking about 6 to 7% year-on-year growth. Now, in terms of expectations for 2024 and 2025, we are talking about double digit, which is good. On our side, what we look forward in terms of, let's say, earnings is the breadth, is the quality. It should not just be led by these Mac 4, Mac 7. We expect, let's say, the earnings growth to broaden to other sectors. Very interesting to see that the leadership has been led by utilities. Utilities earnings growth is 30%, and this also translates into outperformance by utilities. So you can see that the AI story is starting to expand in those sectors because obviously performance is not coming from bond yields. Performance is coming from the fact that there is this huge demand for electricity, which is also a secondary to AI. And this is what we want to see for the bull market to continue to move higher, is the broadening of participation, and AI could become, let's say, a global driver of the equity markets going forward.
That is very interesting. I had not noted that utilities had been doing so well recently. That's why we bring you on. Thank you so much for joining me today on the show. Charles-Henri Monchau, Banque's CIO. Still to come as well in our show, results begin trickling in after South Africa's least predictable election since the end of apartheid. We get a live update from Johannesburg ahead. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Niamh in Dubai. Well, we're getting a bit of breaking news out of China. And the news is that China is weighing record fines for PwC over their auditing work in Evergrande, which, as we know, is one of the high-profile property companies that entered into administration a couple of years ago. That also was a signal for many of the property declines that we saw in that space over the course of the following few years. But in terms of this story specifically, China is looking to impose a record fine. Our sources have told us that the fine amount may be at least 1 billion yuan, that is equivalent to about $138 million. That would exceed the previous record fine for Deloitte that was handed out in 2023 and was equivalent to 212 million yuan. So we're talking about 5 times bigger than the fine that was given beforehand. So if they do go ahead with this fine to PwC, it would be quite substantial if you look at it in the context of history. Now, I should point out that the Ministry of Finance and PwC have not responded to Bloomberg requests for comments, but again, could be quite a substantial fine if it is slapped on them. Now, for a look at some of the other stories we're following this morning as well, BHP has abandoned its $49 billion bid for Anglo American, walking away from what would have been the biggest mining deal in over a decade. The announcement marks the end of a 5-week public battle between the two miners who disagreed over a complex deal structure. The pressure will now be on Anglo CEO Duncan Wanblad to deliver on an ambitious turnaround plan. And activist investor Nelson Peltz has reportedly sold his entire Disney stake. That is according to CNBC, citing an unnamed source. Peltz's Trian Funds Management last month lost its bid to obtain Disney board seats. Trian controlled Disney shares worth more than $3.5 billion and has been a major story that we have been tracking over the course of the last year. And no doubt Bob Iger will be relieved that Nelson Peltz is no longer sitting on the board or pushing for a seat on the board, given his Disney stake. All right, very quick look at some of the futures before we head out to break. And you can see that some of the local indices, Tadawul in focus today, up 0.3%. The big news, of course, that we've been talking about on the show is that Aramco may be looking to issue another $10 billion in its secondary share listing as soon as Sunday. We'll have more on that story in just a moment. We'll be right back. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. Saudi Arabia sets up to launch a $10 billion share offering in oil giant Aramco. Interest across the region already exceeds that amount. A top Israeli official thinks the war against Hamas will continue until at least the end of the year, as the U.S. says a fresh hostage ceasefire deal is on the table. And Arab leaders arrive in Beijing for a summit with President Xi Jinping. Trade and Middle East security concerns, the main topics for discussion. Well, it's just gone 8:30 a.m. across the Emirates. I'm Niamh in Dubai. A quick market check for you. Yesterday, we did see declines for Wall Street. S&P pulling back. Salesforce, one of the stocks in focus. The stock was down 14% yesterday in trade. That majorly weighed on the index. All indices, all of the sectors in S&P ended the day in the red. And you can see futures today are also pointing towards a weaker start, down 0.5%. Treasuries also in focus right now. 10-year is sitting at 4.6%. But we did see another move move higher to the tune of 6 basis points yesterday after the 7 basis points move higher the day before. This following on from another weak auction yesterday. 7-year auction didn't clear at the level it went in. So has been an indication to the market this week that perhaps the demand for all of the issuance that's coming isn't really matching up. So one of the reasons why yields are moving higher. Brent in focus, sitting just below $84. Can't get a sustained bid, as we've been talking about, still down 3.5% on the month as we head into that OPEC Plus meeting. We're going to talk about that shortly. And then dollar yen, once again, seems to be on investors' minds. We're sitting at 157. The yen is about 0.2% firmer versus the USD, but continues to creep higher and higher and weaker, despite the fact that JGB yields are also moving higher in yield terms too. One stock I want to draw your attention to today, very much a focus for our region, is Aramco. And you can see the shares are trading at around 29 riyals. The IPO price back in 2019 was 32 riyals. So we haven't really done a lot since that original IPO in December 2019. But of course, the big story today is that they are looking to come for another secondary share offering of up to $10 billion as soon as Sunday. So big story we've been talking about. All right, let's check in on how markets in Asia are faring as well. Avril is in our Singapore studio. Avril, what are you watching out for?
Yeah, Jumana, we're still seeing risk off in the Asia Pacific. The stock gauge is down. As you talked about, we're seeing that dollar, yen, Japanese currency is still weak, even though it is not far from those levels which last prompted intervention. It's also interesting that today we got a 2-year auction for Japanese bonds, and looking at the bid to tail the cover ratio, that seems to indicate that demand was pretty solid. So Japanese bond futures actually paired some of those losses. The yield on the 10-year actually coming down. Let's flip the board, because something else that's interesting today is how tech is not doing well amid those higher US yields, but Chinese chip stocks are faring pretty well, all things considered. They might be getting a bit of a boost if Samsung's labor union actually goes through with that strike, and those supply chain disruptions might in the short term benefit the onshore chip makers. We're also seeing Hang Seng Tech in focus, approaching levels which would qualify for the definition of technical correction from its peak in May. It's interesting how quickly the sentiment towards some of these Chinese tech names can turn amid the price war going on with those AI offerings, but also those geopolitical tensions that's been weighing on some of the sentiment towards Chinese tech names. Jumana.
As ever, geopolitical tensions. Thank you, Avril, for that overview of what's been going on in some of those Asian markets. Well, speaking of the region, Chinese President Xi Jinping is outlining his vision for greater cooperation with Arab states during his speech to leaders from Egypt, the UAE, Bahrain, and Tunisia. Xi also reiterated Beijing firmly supports the establishment of an independent state of Palestine. For more, let's bring in our Middle East economics reporter, Abir Abu Amar. Great to have you with us. Looks like there are so many lines of conversations taking place between China and many of these Arab leaders, be they political but also economic as well. And I think it should be pointed out that people probably forget this or don't realize this, but China imports about 1/3 of their oil from the region. So there is an economic incentive to have these discussions.
Yeah, good morning, Joanna. So, you're absolutely right. The story that we had this morning was that the president sort of outlined what he wants from the region, Arab countries, and the topics were about finance and technology. Now, I really want to bring in the term soft power, and this is exactly what China has been doing in the region for the past few years. But we saw that come about last year with the Iran-Saudi broker deal, right? So that was their first step in diplomacy, but then we're seeing a lot of Chinese investments. And speaking about energy, as you just said, UBS estimates that in the coming period, energy-related trade could come to about $400 billion from this new relationship between Middle Eastern countries and China, essentially. So tech, finance, we see a lot of Chinese companies, a lot of Chinese banks coming to Dubai, for example. Lenovo had a deal with the PIF with a $2 billion convertible bond. So, a lot of Chinese interest.
Yeah, we spoke about that yesterday with our colleague Matthew Martin. Very interesting that PIF actually did buy into that $2 billion deal of Lenovo. But look, it does come with some risks as well. And let's not forget that this region, Middle East, is somewhat in the middle, geopolitically, also geographically, between the U.S. and China. And there has been a big ambition to amplify some of the investments into tech and into AI. And I think a very good example of the region getting caught in those crosswinds is what happened with G42 and the fact that they had to divest away from China in order to secure the investments from Microsoft. That's an interesting story. And how do you think it is playing in and being factored into the discussions right now between the UAE and China, for example?
I mean, you're absolutely right. That deal was, you just took the words right out of my mouth. That deal really does materialize what the Middle East and China are getting in these crossfires. So this deal that happened, the UAE divesting away from China, and a month later saying that they're going to have Microsoft invest or sit in the board of G42 really shows that the UAE had to pick a side when it came to this specific industry. But as you said, geopolitics are at the heart of the game. The war, President Xi did say that the war must not continue indefinitely, but also global trade tensions, right? We know that the U.S., the Biden administration is going to impose hundreds of tariffs on Chinese goods, and so will the EU, where, it will probably impose levies on the EV industry in China. So all of that comes, to these risks that that could come in front of this new relationship between Middle Eastern countries and China.
But at the end of the day, it is quite notable that all of those Arab leaders are theirs, and he's giving them a very warm welcome. So that in itself is news. Abir, thank you so much for sitting around the desk with us. That was Bloomberg's Abir Abu Amar joining us around the set. All right, let's focus on commodities. With oil steadying after retreating yesterday, OPEC Plus is preparing to review global crude markets this weekend, with weaker demand from China up for discussion. For more, let's go to Niamh Atkinson, independent energy analyst at EnergyAnalysis and former head of oil at the IEA, and someone I've spoken to many times over the years. Good morning to you, Niamh. Maybe let's just start with the newsiest bit, which is that the OPEC Plus are meeting this weekend. It's going to be a virtual meeting on Sunday. I haven't seen any analyst who expects there to be a change in the production or for them to reevaluate how much production they're looking to take off the market. Is it your expectations that they just extend these voluntary cuts until the end of the year?
I think that's the most likely outcome. I'm obviously very sad not to be able to take a nice trip to Vienna in June, but I think the ministers having their meeting on Sunday, of course, when the markets are closed, will essentially look at the current market, and they can see that in the second half of 2024, notwithstanding the worries perhaps about Chinese demand that you alluded to a second ago, they will see in the second half demand higher than it was in the first half of the year. And if that does materialize, they'll also see that at the same time, the growth in supply from non-OPEC producers will be less than that increase in demand, which gives them the scope to see a tighter market and possibly prices rising a little higher. So I think they'll look at the market, they'll think that prices aren't as high as we would like, but they're as good as they're likely to get in this short term.
Let's talk about the intra-country dynamics within OPEC, because it's all very fine and well for them to come out with these voluntary cut or their targets, but actually compliance has been quite low. You see the likes of Iraq overproducing, Russia, obviously part of OPEC Plus, still producing more than their quota, UAE pushing to be allowed to produce more. How are all of those intra-country dynamics going to be resolved over the course of this weekend?
Well, I don't think they are going to be resolved, to be frank, simply because we're in this holding pattern at the moment where prices are pretty stable. There are a lot of issues you mentioned, for example, overproduction. That varies between 500,000 to 800,000 barrels a day, depending on whose numbers you look at. Of course, we're in a situation where we have formal quotas, but also these voluntary cuts. And of course, the picture is very, very complicated for analysts to follow. But the point is that there are countries such as Iraq and the UAE in the Middle East region who are both seeing their production capacity grow over time. The UAE has already managed to gain an increase in the basis on which its quota is drawn. And these pressures will continue, but they are not going to be addressed significantly at the meeting this weekend. It becomes very different when we reach the end of the year and we're looking into 2025, with again a year which may see strong growth in competitor production from the non-OPEC countries. So these issues of quota levels can't be put off forever, but I don't think they're going to be addressed significantly this weekend.
Niamh, I don't know if this is a controversial thing to say, but it seems to me going forwards that it is not OPEC supply growth which is going to determine where the net change in supply is coming from. The big swing factor has been over the last couple of years and will continue to be the production that's coming out of North America. So to what extent do you think is that going to put a dampener on whatever the OPEC decide to do? Well,
it's always a factor because there's nothing the OPEC producers can do about the production trends that we're likely to see from Brazil and Canada, the United States, Norway to some extent, and of course Guyana, which is a new producer and which is growing very strongly. And OPEC is just going to have to accept that certainly for the next few years, although oil demand is likely to grow fairly steadily, I'm certainly not a peak demand advocate, they are going to have to accept that other producers are going to be taking a significant share of the growing market, and they're just going to have to suck it up. And this is the world in which they're going to have to live. And for the producers that want a higher price, we're always told that closer to $100 a barrel would be their sweet spot. Well, I think they're just going to have to accept that that is not likely in the near future and just live with the situation we're in and maintain the discipline or better discipline with respect to their own quota, their own quota levels.
Well, I'm not going to let you go without asking you if you do have a price target for oil over the next 6 months, given all of the things that you articulated now, OPEC, what they're likely to do, the non-OPEC supply that's coming to the market, and the reasonable demand picture that's emerging.
Yes, a reasonable demand picture, non-OPEC production coming to the market. I think unless there is a major shock, and I think we've essentially now eliminated any kind of price premium from geopolitics. I think the Brent price is going to hover somewhere around the mid-80s towards the upper 80s if demand is stronger in the second half of the year. But I don't think you're likely to see any excitement much higher than that. So mid to high 80s, and that's about as good as it's going to get.
Yeah, fair. Niamh, we'll leave it there. Thank you so much for joining us today on our show. Niamh Atkinson, independent energy analyst at EnergyAnalysis.FR and former head of oil at the IEA. Also coming up, early results are trickling in for South Africa's most unpredictable election in 30 years. We'll tell you who's leading next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, votes are being counted in South Africa's most closely fought election since the ANC came to power 30 years ago. Let's bring in my co-anchor, Jennifer Zabazaja, who is in Johannesburg. And from what I've seen, Jennifer, it appears as though the vote counting did start with a bit of a delay. So what's going on?
Right, Jumana. I mean, I think it's important to remember just what these election officials were dealing with. I mean, more than 23,000 voting poll sites across the country. Not just that, nearly 28 million South Africans registered. And so it was bound to be a pretty big task to begin with. But what we heard from the IEC late last night on Wednesday, they said that there was a last-minute rush in urban voting and also what they say was a high turnout in much of the country across the country on Wednesday. But then we also heard from a number of voters. I mean, we were looking at pictures and videos of people queuing in lines for hours and hours on end. There were also some complaints about internet systems, the power systems potentially being down. And then there's also the added factor of first time South Africa was using this 3-ballot system to complicate matters. And so, yes, right now we're barely at 1% of the counting, but still just waiting to hear from the official election officials about what percentage we're actually going to get soon.
Well, 1%, so still very early days. When can we actually start to expect real-time projections? I mean, how long is it going to take to get to 90 plus?
90 plus, Jumana, it's going to take a little bit. I think we're in a marathon, not a sprint. But listen, right now you were just mentioning we're just about 1%. As of just an hour ago, we only saw about just over 188 of the country's 23,293 voting districts that had actually been counted. But we're not going to get the official results from the state research body until we get to 5%. And so we could be waiting until maybe midday here in Johannesburg in South Africa to actually get the official results. But we are hearing from election officials saying that they do believe that we are potentially going to see record turnout. There's some indications are saying 66% record turnout, and that is up from about 47% in 2019. So we're going to have to see and wait until we get those official numbers. But yes, I would say it's a marathon at this point in time.
Yeah, you know, that number, 66%, I think is what you just said, it compares to the previous elections and is higher, so more people are showing up to vote this time. Does that favor the incumbent party? Does that help the ANC? Or is it a sign that people are looking for change?
Well, it's interesting, Jumana, that you asked that, because leading into this election, a lot of the discussion was the ANC wants to see higher voter turnout, because then that typically in the past has favored the party. But given there were nearly 50 parties that were running this year, it's unclear whether or not this is actually going to mean more votes for the ANC, potentially more split votes. And so, you know, it will be really interesting to see sort of where the breakdown is, whether or not it's young voters who are voting, whether or not it's urban voters who came out in more force than in the past, or rural voters, because that will give us some indication where the voters are favoring, what parties they're actually favoring at this point in time.
Yeah. Well, fascinating to see how it's all going to play out. Thank you for your coverage all of this week, Jennifer. Jennifer Zavisaja, my co-anchor in Johannesburg today. Well, plenty more ahead. This is Horizons Middle East and Africa, and this is Bloomberg. We'll be right back. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Well, the war in Gaza is the most expensive in Israel's history. The central bank has estimated the cost of the conflict will run to $69 billion through 2025. Perhaps the biggest risk is a reversal in investment flows into the all-important technology sector. Let's bring in Bloomberg's Galit Elstein, who is in Tel Aviv, for more on Israel's economy. And Galit, thank you for joining us this morning. I don't think it's a surprise to hear that war has devastating effects on a country's economy as well. A similar thing happened back in 1973, the Yom Kippur War. And after that, Israel entered into a decade of what economists called a lost decade of growth. So could we be up for a repeat of what happened post the 70s?
Yes, hi, good morning. So as you mentioned, this is the most expensive war in Israel's history. And what we're seeing now in light of the October 7th attacks and the fallout that we've seen in other arenas on Israel's northern and southern borders, it is basically agreed upon that Israel will need to raise its permanent defense expenditure over the next decade or so. So as a percentage of GDP, military spending in Israel stood at around 4.5%, just to give you a sense, on the eve of the Gaza war. And this was an all-time low for Israel. And estimates are that now, this year, in 2024, that will double to 9%. And one big question is how much Israel will have to spend every year on its security moving forward for the next decade or so, and how Israel can make sure that that spending is sustainable, that this addition to the defense expenditure is possible. And as you mentioned, for many, this is reminiscent to Israel's position after the Yom Kippur War in 1973, when Israel was attacked by Syria and by Egypt, and it was a surprise then as it was on October 7th. And I would say that the national trauma fed the sense that there is an urgent need for more preparations then, and that is the same thing that is happening now. The Israeli economy is very different today than it was 50 years ago. It is a lot more global. It has a GDP per capita that surpasses the UK and Japan and France. So the outcome won't necessarily be the same, and the concerns are not necessarily the same. But there is a fear that this too will impact the economy over the next few years in a way that can be even dangerous if you ask some economists.
Yeah, and just, very quickly, what sort of impact could that have on the all-important tech sector in Israel?
Right. So I would say that the main concern, this has to do, of course, also with the high-tech sector, is that the government's fiscal policy is not creating enough growth engines that would allow this excessive spending over the next few years, because you need to provide for security, but you also need to provide for social services. And I think the most major concern is the high-tech, because high-tech is Israel's economic engine. And I would say that what Israel is or should be thinking about now is the ability of the sector to keep securing foreign investment, to keep making sure that Israel remains a hub for both international high-tech giants and for local startups. And that is one of the most important tasks. There are more economic challenges that we probably won't have the time to go into now, but all that
we're going to leave it there. Thank you so much, Galit. That was Galit Alstein in Tel Aviv. Thank you so much for the overview. All right, that is Horizons Middle East and Africa. I'm Jumana Bersetchi in Dubai. Stay with us for our Daybreak Europe.